And the real question, Kate, to me is, so there's going to be obviously a shrink in the bonus pool, but what do you think the layoff picture looks like at the same time?
I'm sure that people are apprehensive about that, Andrew. I mean, we know, for example, from Goldman Sachs CEO David Solomon that they're going to go through a layoff exercise any day now. And although this was an annual thing for many years, they had put performance reviews on hold during the pandemic. They're reinstating the dreaded performance review, and they're going to be getting rid of the bottom performers, that sort of 1% to 5% bracket. So I think it's possible that we'll see that at other Wall Street firms as well, especially as profitability falls and we continue to have so much market volatility. But more importantly, volatility, of course, is good for the sales and trading desks oftentimes. But in banking, you see that all-important M&A number continue to fall. I looked at the Dealogic numbers yesterday, year to date, and they are way down year over year.
So how much of the Goldman layoffs do you think is just a culling after, you know, a 3 year period where they continued to hire during the pandemic? And how much do you think is actually related to this current state of affairs in terms of where you think M&A and other banking activity really is?
Well, that's the key question. So far, it's been framed as a culling, right? I think partly because they don't want people to get nervous about that other possibility you were talking about. But at the same time, you know, they historically had about 40,000 people employed at the bank, and they went up to about 50,000 during the pandemic because of all the hiring you mentioned. So I think there's probably a reassessment going on there of their staffing levels, as well as at many other places about their staffing levels, especially as we go into a, not to use the R word, but potentially recessionary period where everybody's going to want to hunker down and stick to businesses that have the proper P&L as they see it to weather the storm.
Okay, so the flip side of this question is, in an environment where unemployment rates are so low and everybody is looking for employees, to the extent that folks either are going to be losing their jobs or are not going to be getting the bonuses that they expect, want, et cetera, are there other opportunities on the other side for these same people?
Yeah, I looked at the Johnson Associates second quarter report. Their third quarter report, of course, not available yet. But they looked at bonuses by sector within finance. So they looked at hedge funds, traditional asset management, private equity, banking, and they break down into segments in terms of sales and trading versus investment banking, et cetera. So as always, and I remember doing this story often when I was full-time at CNBC, like the great performers, especially on the trading desks, are always going to have job opportunities, right? And so there's always this carve out for people who are particularly successful. And in a year like this, where rates activity and fixed income activity has been kind of wild, you know, those that were able to capitalize on that and generate profits are going to have good opportunities. So I think in the hedge fund side is probably where you see the greatest strength in terms of bonus potential, at least according to Johnson Associates. And I also talked to a couple of finance recruiters yesterday who seem to share that feeling. So they'll still have optionality. Investment bankers, tough year. I mean, one person I talked to said they thought potentially bonuses could go down as much as 50%. And they mentioned that, think about last year as a real high. So, you know, in absolute terms, that sounds bad. In relative terms, you have to consider how good last year was and how far one would have to fall from that. But at the same time, like, there's not, I think, a lot of mobility for those that are sort of the middle bracket of performance and are in a challenged area because you're seeing those challenges in traditional asset management. You're even seeing it in private equity.